Let's go to market watcher Mark Avalon. Mark, I'm just wondering how this plays out. The president is going to be tempted, I would think, to respond to this development. He hasn't yet. But what do you think?
Well, he usually does respond. But, first of all, cuts in that area of the world don't always hold true. So let's see what really happens with production. The other aspect is oil prices have come down a lot, and that could be a shake up to our high yield market, our production. There's a silver lining here. It's not all bad if oil prices stabilize. Remember, a few weeks ago, we were looking at daily drops repeated every day, and that could cause its own issues. So I don't look at price stability in the oil market or even a slight blip up from these levels as trouble in any economic way right now.
Well, doesn't it, and I know this is outside your area because you're actually a very substantive kind of guy. I'm looking at the politics around this, that the Saudis have given us yet another reason to distrust them.
Well, that's true. Look, there's two stories coming out of Washington. There's the one with all the data and the facts, and senators are speaking out very candidly about how they want to treat Saudi Arabia, and then we have the president. There is a political aspect. But from a market standpoint, I want to see the Saudis actually cut first before I take action with any portfolio. And then I also want to look at, remember when oil was in the 30s, how dangerous that was for a high-yield market and how production slumped, and that caused a pullback economically. It's not all bad to have some stability in the price market.
Yeah, I mean, people forget that you can go too far on lower oil prices, and people, filling up their tank and seeing, $2 something gas. And now I think about a dozen states it's under $2. They love it, but obviously that has ramifications. What is your sense of what's going on right now on all these multiple trade and international fronts? Now, the latest, of course, on China. We're going to get into that a little bit more with my next guest, but there is a consequence for actions, and now the president jawboning the Chinese to do more. Early indications are that they will, but it could be the Saudi thing in reverse. We'll see if they do that. What do you think?
Well, when this trade spat started, the U.S. economy was roaring ahead, and the global economy was going along at a 3% growth rate. It's been dragging on, and now there's global weakness, and the U.S. earnings may have peaked, U.S. economic cycle may have peaked. And I think our leverage to withstand, or at least the stock market's ability to withstand the type of back and forth and the uncertainty is showing to wear. The stock market is not as resilient as it was in the face of this back and forth and this uncertainty. And with a weaker global economy, I think that's a net negative for stocks. We really need some clarity, and we need the tone out of Washington to slow down. We need the heated rhetoric to be pulled back and some incremental progress.
All right. Hope springs eternal during the holiday season. We'll see, Mark. All right. Thank you very much.
Okay.